In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple stock hits a 7-month low as more analysts join the chorus of skeptics warning about the prospects for iPhone sales. We will hear from one who just cut his target. Plus, 2018 was the year of so-called techlash. What does 2019 have in store? We'll look at the possible big tech trends in the year ahead. And now Amazon-owned Whole Foods splits up with Instacart. How big a blow will this be to the grocery delivery service? But first, to our top story. Apple says China's iPhone ban may force it to settle with Qualcomm, but that smartphone makers and consumers will be the big losers. Apple will also push a software update to Chinese users to modify functions found to infringe key Qualcomm patents, but Qualcomm says this isn't nearly enough. Here to discuss, Bloomberg's Mark Gurman, who of course covers Apple, and Matt Larson, Vice President of Oceanic Partners, former patent litigator and equity analyst focused on the impact of tech lawsuits on financial markets, also a former Bloomberger. And we're glad you're back here today, Matt. So walk us through the fine print.
Sure. So high level, Apple and Qualcomm have been fighting for a number of years. There are over 100 individual legal proceedings spread out across the U.S., the U.S. International Trade Commission, district courts, the Patent Office, China, Germany. This is a wide-sweeping dispute. It's all in leverage over patent licensing fees, or basically the fees that that Apple and other smartphone makers have to pay in order to use technology developed by Qualcomm. Some of that is essential to 2G, 3G, 4G LTE standards, and some of it is kind of value-add technologies that have to do with power, battery power, screen brightness, how the modem works, things like that.
And if they're going to do this for the phones in China, I mean, are these issues that, also exist in other markets?
These are issues that Qualcomm has raised in multiple jurisdictions. So in the U.S., Qualcomm hasn't gotten a lot of traction. There was an International Trade Commission decision that went in Qualcomm's favor in terms of finding certain features infringed of the iPhone, but the ITC decided not to issue an injunction, or recommended not. That decision is still pending. It could go the other way. China is traditionally a more favorable jurisdiction when it comes to patent litigation and actually blocking the sales, export, import of infringing features. So it's an incremental win for Qualcomm here. All these decisions are kind of, in the aggregate, will facilitate settlement talks and ultimately where the dispute winds up resolving.
So the statement from Apple today says Apple will be forced to settle with the respondent, that is Qualcomm, causing all mobile phone manufacturers to relapse into the previous unreasonable charging mode and pay high licensing fees, resulting in unrecoverable losses in the downstream market of mobile phones. So Mark, Apple is saying this will impact the consumer, this will impact other handset makers, and in fact, other Chinese handset makers have also complained about the fees that Qualcomm charges, correct?
Yeah, that's absolutely right. And that quote is from an Apple lawyer filing, so Apple's filing to the Chinese government, them seeking to overturn this injunction. So they're basically saying that in one scenario, or in their worst case scenario, they would have to settle if the injunction in this ban is not overturned by China.
Qualcomm, meantime, says they are legally obligated to immediately cease sales. So this is what I mean about not being happy with just this design issue. Offers for sale and importation of the devices identified in the orders, and to prove compliance in court. That's from Qualcomm's general counsel. Matt, how likely is an actual ban here? More broadly? Yeah,
more broadly, I think it depends on who you speak with. Qualcomm will say, a ban is very likely. They've won in court. They've got a lot of cases pending. They anticipate more wins. Apple, on the other hand, I'm sure will take the other bent and say, look, we have designer rounds. We've planned for these contingencies. So it's tough to say because a lot of this functionality lives in the guts of the phone, and it kind of depends on the sufficiency of the workarounds. All of that is confidential, under seal, so it unfolds. But the threats loom, and it becomes a little bit of a procedural issue. Can you get the designer rounds approved in time to avoid the bans? Or on the other side, do the bans go in effect and really start to cause supply chain headaches? It certainly causes a distraction for Apple in trying to come up with these and coming up with these contingency plans. So, it creates that pressure. And whether or not one actually goes into effect, it's certainly causing headaches.
Mark, meantime, Apple is, fighting concerns about iPhone sales more broadly. We know that this is the first quarter. They're not going to report unit sales. That has everyone concerned. Also, as you've reported, pseudo discounts being offered for the iPhones with trade-in. Put this into context for us.
Right, yeah, that's a really good phrase for pseudo discounts. I wish I thought of that. In context, it's just a continued string of bad news around the iPhone for Apple. And what, like you said, is hanging over the whole thing is no longer reporting unit sales. So in the past, we would get this string of bad news, and then Apple would report how many units it actually sold to the iPhone, and then everything would be okay. This time around, we're not going to get that clarity from Apple, and that's what has a compounding effect for investors and analysts and consumers who are worried about this.
How do the trade tensions, Matt, impact this situation between the United States and China?
I think the dynamics play in. The Chinese courts are certainly beholden to some government interests, but at the same time, China has done a lot to try to set up a very strong, when it comes to high-tech, intellectual property system. They've actually gotten a lot of input from the U.S., from Germany, in constructing these specific IP courts.
Which is so ironic, given the concerns about the way China handles IP from anywhere else.
Yeah, and there's a lot of rhetoric, and it's kind of, they're of two minds, right? For a long time, I think the reputation was if you send tech to China, it gets copied, it gets ripped off. That's still true in some venues, but in others, you think about the China 2025 initiative, they've realized that they need to protect some of these high-tech investments and bolster their own intellectual property protection in order to thrive moving forward. So we're seeing a little bit of a turning point. The trade concerns and some of the mandatory patent licensing and things like that go on in China certainly play in here. But that being said, these are lawsuits that were filed a long time ago. Qualcomm went to China. Apple filed defensive suits in China because they have pretty robust protections. And so it's kind of both sides of the sword. It's certainly been selected as a jurisdiction because of these characteristics. But I think some of the trade tensions tend to play in Qualcomm's favor to the extent that's just the momentum that the judges are feeling.
Mark, could complaints from Chinese handset makers perhaps help Apple's case?
Absolutely. More than anything, China is a fan of their own, component makers, their own phone makers, Huawei, Oppo, Xiaomi. So if they start chiming in on Apple's behalf and in Apple's defense by saying, that Qualcomm is impacting them too, that would be a win for Apple as well. And it's sort of ironic, given Apple's new competition in this global smartphone landscape is the Huawei's, Oppos, and Xiaomi's of China.
So, Matt, what does the settlement outlook look like? I mean, does Qualcomm really have the upper hand right now?
It's complicated, not just in the dispute between Apple and Qualcomm, but also the US FTC and their lawsuit against Qualcomm. Apple's argument all along has been so long as Qualcomm's licensing practice is under scrutiny by federal regulators across a bunch of different countries, they can kind of sit back and say, we think these rates are too high, the regulators think they're too high, let's see how it plays out. But that becomes less attractive when you're facing product bans in China, when you have lawsuits that are reaching decision points across the US and Germany. The timing, if you look at all these lawsuits and where the decisions come out, tends to be, end of this year, early next year. The companies have a pretty good idea of how these decisions are going to go, even though they're not public yet. So, I think it increases the settlement prospects. It's always very difficult to predict when a lawsuit is going to settle, but just because of the timing of the dispute, I think it tees it up nicely where the lawyers, the counsel, the business people kind of see the writing on the wall and can guess what an ultimate outcome is going to look like. And so that narrows the, kind of the bid ask when it comes to where a licensing fee could fall.
And last question, Mark, is this something that Apple can design around in the future? I mean, they've been trying to minimize their reliance on Qualcomm products, Qualcomm IP, but can they make an iPhone without it?
Yeah, so the latest iPhones, the ones that so far have not been impacted, Qualcomm is saying they are impacted, but so far there hasn't really been much of the discussion. The 10R, the 10S, and 10S Max, those have Intel modems exclusively, so they've sort of designed Qualcomm out already. Also, Apple's coming out with a software update for iPhones in China next week. They said last night that is going to mitigate 2 patents that are in these latest discussions, the ones that have to do with the injunction. It's unclear how Apple's going to work around it, but I don't anticipate any consumer-facing changes that would be easily noticeable.
All right. Our Mark Gurman and Matt Larson, who's not ours anymore, but works at Oceanic Partners. Thank you so much, Matt, for coming back to visit. Later in the show, we will continue our conversation on Apple with D.A. Davidson analyst Tom Forte, who just cut his price target on the stock. Well, the maker of Photoshop posts a rosy sales forecast that beat estimates. Adobe signaled that its roster of products will maintain strong growth. The company is trying to become a market leader in advertising software and e-commerce tools. 2018 was a year dominated by tech scandals and tensions. What does 2019 have in store? We'll take a look at next year's potential top trends. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Has been the year of, well, we call it techlash, with concerns about data privacy, fake news, and the growing influence of big tech globally. Facebook, Amazon, Google have all faced their share of controversies. At times, that has distracted from innovation and technological breakthroughs. As a result, we've seen a massive rout in tech stocks this year, with big pullbacks from Facebook and Alphabet especially. So as we approach year end, what does 2019 have in store for tech? Joining me to discuss, Michael Wolf, CEO of Activate, who just published their tech and media outlook for 2019. So Michael, would you say that all of these controversies have overshadowed some real innovation this year?
I definitely think they have. I think we're going to see so many more exciting things that are about to happen in tech, so many new innovations, and also ways that are going to add noticeably to the revenues of not just the major tech companies, but also a whole set of other companies in the ecosystem.
So what tech do you think is going to break out in the coming year?
I think that 2019 is the year of the smart camera. We see the leaders in this are Amazon and Google. But we expect that within the next 3 years, the average American will have 12 smart cameras in their lives. And that's above and beyond the camera that today is on your computer or on your phone. And the reason is because of the huge amount of intelligence that's going to be built into the network around smart cameras, and the fact that people aren't just putting one smart camera on their homes. Once they own one, they're going to own more.
So what do you mean by smart camera? I mean, we've got our phone cameras, our computer cameras. Maybe we've got an Amazon Echo Show, which has a camera.
Right. So it's the Show, it's the Ring, it's all of those cameras. It's the cameras that people are going to have on their cars. We see the smart cameras just exploding because people are looking at them as a way in which they can not only interact with other people, but they can control the security in their lives. I mean, earlier you talked about concerns about privacy. Interestingly, all of our research shows that the people that are the most concerned about privacy are the ones who are the most likely to want to have a smart camera.
So, smart camera, you think that will be more important than smart speakers? You know, these speakers aren't just on the kitchen counter anymore. Amazon makes them on the go. There are so many different versions.
Yeah, the last years have been about voice. Going forward, it's about vision. It's going to be about not just what the intelligence can do in terms of what it hears you say, but it's going to be what it sees you doing. And so we expect that people are going to put more of the cameras, more of the devices with cameras inside of their homes. And we're already seeing that. So many of these smart speakers are already equipped with a camera. But there are all the standalone cameras that are then networked together, and it becomes even more exciting when you think about the fact that people put a Ring camera on their front door, on their back door, on their windows, and then they network with everybody else in their neighborhood to see what else is going on.
Now, you've also done some research on how much more time you believe we'll be spending with tech and media. You know, how are all these additional cameras and speakers going to help our tech addiction?
We expect that within the next year, people are actually going to spend another 10 minutes a day with tech and media. And of course, that's on top of what they're doing already. A lot of that comes from multitasking. And some of the places where we're going to see the most amount of growth are in places like web video, other things that people are going to be able to do. And in addition to podcasting, so many of these are going to add to the amount of time that people are spending with tech and media, and they're time stacking today. They're doing, it's not just about what I'm doing now, it's about what I'm doing at the same time as something else.
So by 2022, you say we will spend 12 hours and 32 minutes a day with tech and media. That's kind of frightening. I mean, when do we eat? When do we sleep? When do we talk to our kids? Yeah,
I mean, I think that a lot of that comes down to in terms of, well, what else are you going to be able to do with that time? A lot of it we're looking at is multitasking. It's those stolen moments in the day where you may be doing something else. And so all of our analysis shows that it's going to be people who are they're listening to something, they're watching, they're surfing at the same time, all of the things that people can do all at once, and that's where it's adding. And yes, it's crowding out. It's crowding out eating, it's crowding out sleeping, it's crowding out so many other activities in people's lives.
Heading into the holiday season, it's all about shopping. What about when it comes to e-commerce?
2019 is the inflection point. It is the year in where growth dollars from digital, from e-commerce, are going to exceed growth dollars from traditional retail globally. And but while traditional retail, bricks and mortar, is going to continue to grow, the growth in traditional bricks and mortar is only going to be about 2% a year, and the growth in e-commerce is going to be roughly 20% a year. It's the first time that we're seeing this crossover in terms of incremental spend to e-commerce.
You've got some other categories here: gaming, messaging, music. Sum it up for me.
In gaming, gaming is going to move to the cloud. We're going to be able to play practically any game on any device. We're going to free the gamer from the console or from the dedicated device. We're going to be able to see different ways in which people can pay for games. Messaging. Messaging is today the dominant digital behavior. Today, Facebook controls, between Facebook and Tencent, it's most of the messaging platforms. We're going to see Apple continuing to grow with iMessage. We're going to see a lot of Splinter because their people are going to move into other services like Telegram and Signal and Snapchat. And finally, sports gambling. Sports gambling is going to add roughly $30 billion in revenue to tech and media over the next 3 years.
All right, Activate CEO Michael Wolf, we'll have to have you back here midway through the year to check your predictions. Thank you so much, as always, for joining us on the show. Coming up, Credit Karma is looking to expand outside the U.S. and Canada. Could future M&A be the trick? We'll talk to CEO Kenneth Lin next. This is Bloomberg. Just last month, Credit Karma made a deal to kickstart its first overseas expansion beyond the U.S. and Canada. The company acquired Nodl, a UK-based credit reporting service with 4 million users from TransUnion. Credit Karma looked to deal-making after raising $500 million in a secondary round earlier this year, valuing the company at $4 billion. Here to discuss, Kenneth Lin, Credit Karma CEO. So are we going to see more M&A from you?
It's hard to say, but we think there's a really big opportunity in this space. When you think about the transformation of financial technology over the last 20 years of digital internet, there hasn't been that much. And we think that not only in the US, but around the world, there are opportunities to have a pro-consumer financial services company that represents and thinks about their best interests.
Now, you're a $4 billion company, so much more than just a credit score, right? Providing consumers with their credit score. Talk to us about the breadth of what you're trying to do here.
Yeah, so if you think about digital transformation over the last 20 years in financial services, you realize that not that much has changed. There are banks, they are great, but they're somewhat utilitarian, and consumers expect more. And really the big thing in financial services is that there's this obfuscation layer, which is credit quality and the ability to determine what the right products for any given consumer are. That's what we do. So Credit Karma has a lot of financial data about a consumer, but with that information, we can really help price them into the right products. We can help determine whether they can get better pricing. We can, most importantly, determine whether or not they qualify for a product, and that's really important for consumers.
The credit industry is very vulnerable to it's lots of sensitive information. We saw the Experian hack, we've heard about this giant hack at Marriott, half a million people. Talk to us about what you're expecting on the security front? Like, is it going to get worse? I mean, are you putting your armor on every day?
Yeah, I mean, I think it is going to get worse, right? I mean, that's what their data says. It has gotten progressively worse, and until companies have a posture of really taking security first as a first priority, these things will continue to happen. Our point of view on it as a consumer is that you can get lost in all the headlines. You can either stick your head in the sand, or you can be so fearful of everything that you won't do anything. And I think there's a middle ground that we are embracing, which is really having the right tools to protect people when bad things do happen, giving people a notice of when bad things are happening, but also not saying, hey, don't be afraid of everything online. Don't be afraid of using your credit cards. Don't be afraid of getting loans, because these are not things that are going to make your life better. Right? You can't stick your head in the sand.
So is security not something that keeps you up at night? We just heard Sundar Pichai tell Congress that that is what keeps him up at night.
And for the last 11 years at Credit Karma, I've said security is our #1 priority. It is the one thing that has continually kept me up at night. It's something that I'm fearful of every day, but that's why we put a large security team against what we do, and it's one of the reasons why that we've been in business for so long, is because we make it a #1 priority.
You're also pushing into insurance. What should we expect from you on that front in 2019?
Yeah, I mean, if you think about all the things that transpired, I mean, insurance is another one of those really frustrating areas, right? Everyone notes and says that if you spend 5 minutes or 10 minutes or 15 minutes, you can save X%. That's pretty frustrating if you have to do that 6, 7 times. And there's been a complete lack of transparency in insurance. So earlier this year, we launched a product called, we call it our Insurance Hub. But effectively what it does is when you register, you can click 2 things, and we will actually give you 20 or 30 quotes based on state regulatory filings and our own consumer data. So you can actually get quotes and comparisons without having to put in the 20 forms or questions.
Given all the data you have on consumers, what about savings? What about investing? Is that something that you're interested in?
Yeah, I mean, our vision of Credit Karma is definitely focusing on the borrowing side, because if you think about it, we have over 85 million members on our platform. They tend to be a little bit younger, and today they're mostly borrowers. But obviously, over time, those consumers are going to be moving to be net savers, and we think there's a big opportunity there. So we think about helping consumers find the best rates for borrowing, find the highest yield for savings, and having insurance as kind of the middle hedge. We think there's a real opportunity there. Your
name has come up as an IPO candidate for 2019.
Sure.
Should we be watching for that?
We've been around for 11 years. Our IPO has never been a primary objective.
But could 2019 be the year?
I mean, any year could have been the year, right, in the last few. So we really do think that building a company for the long term, I think if we were a public company, doing things like tax preparation, investing in the UK, and some of the other strategies that we have, they might be much harder. And we think that given the secondary markets, given the private markets and the liquidity there, we can solve the problem.
All right, Credit Karma CEO Kenneth Lin, thank you so much.
Thank you
for stopping by. Coming up, we will hear from an Apple analyst who says iPhone shipments could fall as much as 10% next year. That's next. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Return now to our conversation on Apple. My next guest just gave a new call on the iPhone maker, and it's not good. D.A. Davidson cut the price target on Apple to $280 a share, citing concerns about iPhone demand. Tom Forte, analyst with D.A. Davidson, joins us now from Stamford, Connecticut. So, Tom, which of the bad news stories about Apple led you to do this?
Well, okay, generally speaking, if you look at what's going on with Apple, the company actually sounded the alarm first. When they reported the September quarter, they indicated weakness in iPhone sales in emerging markets, Brazil, Russia, India, and Turkey. Now, since that point in time, and what's caused us to adjust our estimates, is you've had a number of suppliers for Apple cut their forecasts, and so it clearly looks like unit sales will be weaker than at least we initially anticipated coming out of the quarter.
How much does this ruling in China and ban on older iPhones there, Apple now saying they were going to have to settle with Qualcomm if this is held up, how much does that impact your outlook?
I would tell you that's a factor, but the way that I think about that is initially there was a dispute where Apple was suggesting that unlike what Qualcomm was saying or others were reporting, that it was all systems go, they were still selling all their devices in China. So, yes, I think it's important, but not necessarily a determining factor in our more cautious tone on iPhone unit sales for the December quarter.
Now, I have a chart here in my Bloomberg showing just how dominant Apple still is on the iPhone, still about 2/3 of their revenue, even as the company tries to shift to, more of a services-driven company. How many iPhones do you think the company is going to sell this quarter and next quarter?
So originally we were projecting essentially less than 1% growth, or half a percentage of growth. Now we're looking for a 3% decline on a year-over-year basis. And then next quarter, meaning the March quarter, we're looking for another very small year-over-year decline. The way I think about Apple stepping back, though, is that they're still an iPhone-dominated company. 62% of their revenue in their fiscal 18 September year-end came from the iPhone.
Now, historically, how unusual is that in a holiday quarter after they've just revealed new iPhones?
Yes, quite unusual. I mean, I do think that what we're seeing here is very unusual for Apple, and the reason that we still are holding out some hope on the December quarter is in the higher average selling prices for their device. For example, if you look, the least expensive new iPhone, the XR, is 7.5% more expensive than last year's least expensive new iPhone, the 8. So I think that there is some silver lining for Apple in the December quarter, to the extent that the higher selling prices for their devices may enable them to offset some pressure from lower unit sales.
At what point, far out into the future, do you think Apple will be significantly less, 2/3 of its sales coming from the iPhone?
Yes, but I don't necessarily think that's going to be a bad thing. So stepping back for a minute and looking at Apple's product roadmap, you had the Mac to the iPod to the iPhone to the iPad. So I think that the way that I think about Apple's product roadmap and that future point in time where iPhone is less than half their sales, it means there'll be new devices that Apple's selling that'll generate a larger percentage of revenue. So I don't think that's necessarily a bad thing. But clearly today, Apple, like I said, with 62% of sales coming from smartphones, is heavily dependent on that one product.
Right, and a lower price target from you. Tom Forte, analyst with D.A. Davidson, thanks so much for stopping by. Meantime, delivery startup Instacart is cutting its ties with Whole Foods. Instacart announced it will stop allowing customers to order from Whole Foods in coming months. Amazon's $13.7 billion acquisition of Whole Foods in 2017 has made the relationship complicated, to say the least. Is it just another example of Amazon edging out, well, just about everyone? Joining us now to discuss, Bloomberg Tech's Ellen Hewitt, who covers startups, and our Bloomberg Intelligence senior analyst, Jitendra Wawal, who follows Amazon. So, Ellen, is this like the death blow for Instacart? I mean, you see a lot of Instacart shoppers at Whole Foods.
Yeah, and that's a reflection of how long that they've had this relationship. It was the first national partnership that Instacart signed with a big grocer. So for a long time, Instacart and Whole Foods were tight. And as you said, it has gotten awkward, in particular after last year's acquisition from Amazon. So I think it goes to say it's not the end, but it has been sort of the capstone to a very long and sad sort of breakup for those who have been following Instacart and Whole Foods relationship, because after the acquisition, things got really awkward.
Right, talk to us about the lines.
Yeah, so in the early days of the Instacart Whole Foods partnership, this was something where the two companies worked really hard to make sure that Instacart shoppers were able to move quickly through the store, and that meant doing things like setting aside space in Whole Foods stores for Instacart shoppers to pack and sort of sort groceries, as well as even putting dedicated checkout aisles for the Instacart shoppers who wanted to go through more quickly. And then once Amazon started delivering Whole Foods goods, it got weird. So Amazon started having its Amazon shoppers go through the aisles of Whole Foods stores, had their own dedicated checkout aisles. They, in some cases, in San Francisco Whole Foods stores, Olivia Zaleski and I wrote a story earlier this year about how, all of a sudden the space that used to be for Instacart shoppers is now for Amazon shoppers in the Whole Foods stores, and the Instacart shoppers were being shoved like downstairs or into the stairwell, or like it just, you could see it playing out in the Whole Foods stores that Amazon was really trying to shove Instacart out of it. And I think both sides could tell like this partnership isn't going to continue, even though Instacart and Whole Foods had signed a 5-year contract back in 2016. That was before the acquisition.
Now, Jitendra, looking at the bigger picture, Walmart is still the giant in groceries and grocery delivery, but Amazon has made progress. I mean, I'll say from my own Whole Foods shopping experience, it was a little rocky at the beginning of this acquisition. It's actually gotten much better. So where is this going?
So over here, if you look at the Instacart example over here, basically for them to scale into groceries, they have to figure out delivery. Somehow, because you can't grow double digits by physical traffic. That's hard. And so it was sort of inevitable, the friction that we talked about. Now, one strategy that we're seeing from Amazon is to figure out how to make delivery work, because consumers are not really ready to like order online for groceries or really rely on online ordering. You're seeing these convenience-like stores that they're going after, the Amazon Go stores strategy and things like that. So they're going after like this quick pick and pay and move on sort of product categories, the 3,000 stores that they're planning to expand, the airport expansion we talked about. So you're going to see that Amazon is trying to figure out like what innovation we could use to change consumer behavior here, to spur that grocery delivery. Until then, like with Whole Foods, like we continue to expect single-digit growth over there, but until they figure out the delivery angle in which Instacart was in the way of that, they can't grow double digits.
So Ellen, is everybody else enough for Instagram? I mean, Instacart, essentially. You know, can they survive this? I mean, there was always this question, is Instacart just the new web van?
So I think the question of whether Instacart can survive on everything that Amazon is not going after is the big question about whether they will thrive or end up going in a different direction, maybe being acquired or something like that. They have told us many times that in the year and a half since Amazon bought Whole Foods, that they've seen other large retailers like Kroger, Publix, Wegmans, these are ones that are big across the US, sign up with Instacart because they suddenly fear being squeezed out by Amazon in grocery delivery. So they actually have made quite a case that the Amazon acquisition of Whole Foods has been good for Instacart's business. Whether that's true, I think we'll just have to see how it plays out.
All right, well, we're continuing to chart the grocery wars with both of you. Ellen Hewitt, Jitendra Rawal for us. Thank you so much for stopping by. Well, Twitter co-founder and Medium CEO Evan Williams has expressed interest in buying New York Magazine. Williams has spoken about a potential deal with Pam Wasserstein, CEO of the magazine's parent company, New York Media, according to sources familiar with the matter. Williams wouldn't comment on this deal specifically, but said, "We are going to significantly increase our," meaning Medium's, investment in original editorial in the next year. The conversations just show just how serious Medium is about beefing up its content as it transitions to a subscription model, though a source says this particular deal is unlikely to happen. Coming up, while the e-commerce giants have gotten the online shopping experience down to a science, there is one issue that still irks customers: shipping delays on packages. We will discuss next. This is Bloomberg. It is the holidays, and that means online retailers are working overtime. So too are delivery companies making sure customers get their packages on time. Here in the U.S., the U.S. Postal Service expects to deliver more than 16 billion pieces of mail over the holidays, including 900 million packages. According to Adobe Analytics, online sales are forecast to increase nearly 15% from last year, making those handling packages really feel the pressure. Joining us in this week's Retail Transformed segment, Ryan Peterson, Flexport CEO and founder. Flexport is a tech-powered international shipping company that provides real-time tracking. Bloomberg Beta, the VC arm of Bloomberg LP, the parent company of this network, is an investor in Flexport. So, are you getting any sleep right now, Ryan?
Of course, I always sleep great.
First, before we start, I want you to remind us where Flexport is in the stack. So if I get a package from Amazon, how has Flexport been involved?
So Flexport connects the brand that sold you that product, that made that and designed that product, and their factory. So we connect those two. We bring the goods from the factory to Amazon's fulfillment centers.
So what trends are you seeing this season different from last season?
Well, right now it's peak holiday season, right. So you're always in a big rush to get everything in and serve that. But what's unique this year, amongst all others, of course, is the tariffs, and that there's this looming deadline of increased tariffs on the horizon. Brands are scrambling to get goods in, and then all of a sudden the Trump administration relaxed those tariffs, and now people are trying to figure out what to do, how to adjust to uncertainty in the supply chain.
But there's still a potential threat
For sure. And already we've seen big increases in tariffs, and there's threats of even bigger ones on the horizon.
So, okay, the big increases in tariffs. What did you see as a result of that?
Well, one thing we saw is the average tariff. So in our customer base, Flexport imports about 1% of U.S. imports right now by ocean. And our average tariff was around 2% at the beginning of the year. We're now close to 7% is the average duty rate we've seen. So we've already seen a big hike there. Second, we're seeing brands really, those that can, try to shift production out of China and into Southeast Asia. We're seeing big surges in Cambodia, Vietnam, South Indian subcontinent. Even places like Italy and Turkey are having a manufacturing surge.
How easily is it to switch your manufacturing base that quickly?
It really depends on your product. So for apparel, for things that don't have a lot of high-tech equipment involved, where the supply chain is relatively simple in terms of what components go into it, it's not the hardest thing. I think a lot of brands are finding it relatively straightforward. If you have a lot of consumer electronics where there's components and you need other suppliers, it's very hard. South China is where most of those component suppliers are based.
Has the rise in free shipping, so on the consumer side, has that just made your business, I mean, is that a headache for you, or is that just great for business? Because it just means more and more people are buying more and more online without concern for the cost.
Yeah, well, what's really interesting about e-commerce shipping in general, which is where free shipping comes in, is that now the expectation is sort of 2-day delivery at worst.
And for free.
Yeah, and for free, and you see 2-hour delivery coming up, and it really looks different from a supply chain perspective. Now you need to have small pockets of inventory everywhere instead of one central distribution center in the middle of the country. So it's changing the landscape, making it much harder for companies to keep track of all of that. Where's all the inventory in your system? And that's something that we help with. Is managing that by email is very hard. So giving people a technology platform where you can see it all.
So tell us how that's impacting you. The fact that now there's more packages than ever, delivery faster than ever, and customers with higher expectations than ever.
It's super hard to keep track of if you're a supply chain manager in a brand and you've got to have inventory positioned all over and be ready to meet the needs. So that's something that we do for people, is give them that visibility. Where's all my stuff? How can I track it all?
What do you think about this increased focus on the conditions for workers in these warehouses, the conditions for the workers who are responsible for getting a package from point A to point B?
Yeah, well, it's very interesting. You see people actually tend to like those jobs, and they're reliable and good sources of income. And of course, it's hard for us on the outside to have jobs that I wouldn't want to work in a warehouse personally. But those people do it, and they're fairly well paid. And I think there is a shortage of workers still. People are struggling to get enough workers in. So you'll see pressure. Amazon's raised wages to try to help increased demand of those.
Do you think something like these Amazon workers who are pushing to unionize, will that trickle down to prices? Will that trickle down to consumers?
Yeah, of course. Any increase in labor costs has got to, it either is going to hit their bottom line or it has to pass through higher prices. And there's only two choices for Amazon and something like that. Or maybe they invest more in automation.
So what do you see for shipping trends next year? So in 2019, more packages, more technology, continued political and economic uncertainty likely.
Yeah, I think, well, the tariffs are going to be the biggest impact and the biggest question mark. We don't know, is it going to get resolved? Are we going to have forever 25% tariffs? How are brands going to respond to that increased prices? Are they going to pass the prices through? There's a lot of uncertainty, and brands don't know what to do. If you're a retailer, do you change your whole supply chain, or do you wait 2 years and hope for a new president? It's a very hard decision to make.
Are the delivery drones going to be ready by 2019?
I sure hope so. There's a Walgreens less than by drone 2 minutes from my house, and I would love if I could push a button and a drone just drop me a Snickers bar in my top of my house.
All right, Ryan Peterson, CEO of Flexport, thank you so much.
Thank you.
Always good to have you here on the show. Still ahead, SoftBank is plowing hundreds of millions of dollars into a U.S. bio startup. What Zimmergen plans on doing with that funding next. This is Bloomberg. Another privacy misstep by the social network, the world's largest social network. Facebook said a software bug gave outside developers broader access to the photos of a large swath of users. As many as 6.8 million users and 1,500 apps were involved. Facebook apologized in a blog post and says the bug has been fixed. It is also alerting people who have been potentially affected. SoftBank has invested $400 million into Zimmergen, a robot-powered microbe factory. What does that mean? Well, they make a lot of things, among them revamping agriculture and industrial products using AI-powered robots. These robots genetically engineer better microbes. SoftBank says Zymergen represents a huge opportunity which transcends multiple sectors. Here to discuss, Zymergen CEO Joshua Hoffman. So talk to us about the range of stuff that you make.
Yeah, so we basically work in industries, as you said, ranging from traditional industrials and chemicals through agriculture to things that might touch consumer products. And it all comes back to the idea that we live, all of us, in a kind of petrochemical world where the table, the coating on the lenses are all made with chemicals that come from hydrocarbons. And that's a limited palette of starting point, a limited, like a box of crayons, right? That gives you kind of eight chemical structures to start with, metaphorically. Biology gives us a 64 crayon box. And with that broader palette of colors, we can create products, materials, molecules that have a bunch of really interesting functional properties that, as you said, transform whole parts of the real economy.
So I want to give our viewers an idea of just how diverse your portfolio is. So products including sunscreen that doesn't harm coral reefs, plaque killer to eliminate cavities. How do you decide what to target?
Yeah, so we do it in two ways as a business. The first is we have a limited number of application areas and sectors we focus on developing our own products for. Those include things for home and personal care and consumer electronics. And then we work with partners across a broad range of industries, helping them develop products that they're interested in. There's a lot of stuff that people would like to make. They kind of know what they want it to do, but they don't know how to get there. And we can design and engineer and optimize these microbes, which are these perfect microscopic chemical factories, to make the molecule they want at a price that works for them.
The U.S. Department of Defense is a customer. Who else?
So I can't talk about specific customers. Unfortunately, we tend to operate on stuff that they care very much about from a privacy standpoint. I can say we're working across, as I said, most of our customers are Fortune 500, Fortune 1000 companies working in industrials, chemicals, advanced materials, ag, home and personal care, and some medicines.
Obviously, the big story around SoftBank right now has been the ties to Saudi Arabia. Is that something you considered when deciding whether or not to take this money?
No, we've got a long-standing relationship with SoftBank. They led the investment in the B round, the previous round. We've worked closely and with great success with Deep Nishar and SoftBank. We chose them as our partner for this round based on the strength of that relationship. Their relationship with Saudi Arabia, we never see it or feel it or touch it, so it wasn't really an issue for us.
And yet you are dealing with other sort of moral quandaries, bioweapons, opioids. Talk to me about this.
Well, I think in a sense, so first of all, anybody who's running a technology-based company today needs to be thoughtful about what they're going to do and what they're not going to do. I think we have a moral obligation to be thoughtful about the use of our technology. And so in a broad-based platform like ours, you can use it for kind of anything. We think there's so much stuff to go do out in the world that we just don't want to do things which would cause, in our view, harm to the world.
So what are you not doing?
So you talked about not doing bioweapons. We're not going to do opioids. We wouldn't do things that, as I say, we believe causes harm to the world.
You have a massive power and opportunity, though, as you acknowledge. How do you deal with that power? What are some things that you believe can do good in the world?
Well, we believe that, one thing that's very powerful about our platform is that we get to replace hydrocarbon-derived molecules with stuff that's more sustainable. We think that that's long-term an incredibly powerful and good for the world opportunity. We think that it's going to happen kind of one product at a time, and so we're delighted to be able to come up with, better crop protection agents that are more sustainable and healthier for the planet. So I think we try to take a holistic view about how we're going to be helpful. We are interested in working with large players who are in the market. We want to have an impact, and we think the best way to do that is to engage with the existing players.
So how do you plan to use this money?
So we're growing. We're doing three big uses. The first is we've grown our book of business something like 5x in the last year, and we want to continue growing that. That obviously takes capital. The second is we have a super exciting pipeline of our own products that we want to develop so that we can take them to partners, and that also requires capital. Lastly, we have a platform, and it's a platform that integrates some of the most advanced technologies on the planet. Machine learning, advanced automation, genomics, molecular biology. But in any platform-based business, you got to continue investing in the platform or you're going to get stale. So we're going to continue investing and developing our platform.
All right, Joshua Hoffman, fascinating stuff. Zimmergen CEO, thank you so much.
Thank you
for stopping by. That does it for this edition of Bloomberg Technology. Monday, we have an exclusive interview with Jason Droege, Vice President and Head of Uber Everything, the ride-hailing startup's new delivery division. And Bloomberg Tech live streaming on Twitter. You can check us out at Technology. Follow our global breaking news network, TikTok, on Twitter. I'm Emily Chang. Have a wonderful weekend, everybody. This is Bloomberg.